The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. Once more into the breach do we go, dear friends. As we start today's show off, we've got a little higher market out here, up 20 points on the S&P cash. We got up to 2,100. Volume is 2.12, and as I've said before, we are in the doldrums. That is that while we may get occasionally big, huge puffs of wind, they kind of die out when we get down to about 2050, and they tend to also die out when we get above 2,100 as we get into tighter and tighter trading ranges. I thought we would get to 2,100 on Friday. Looked like there was a lot of people trying to make sure and keep the market down before we went into the weekend. On quad witching, it's kind of tough to figure out the competing interests out there. But it certainly looked like a lot of folks were buying upside calls on Friday, and I thought that that probably meant they would try to run it before the close on Friday. But it was today, so we will see how today comes down. But there's a few trends out there running in the market. We'll talk about those today. As always, we like to meet at this time.
The following takes place between 2 p.m. and 3 p.m.
And, of course, what else do we like? We like to get this party started with a little history every show.
That it's all just a little bit of history repeating.
On this day in 1991, International Business Machines warns that its second quarter revenues will fall at least 5% and will miss analyst earnings estimates of nearly $1 a share by roughly 50 cents. That's IBM's first decline in annual revenues since 1946, sending Wall Street analysts into a deep funk. And we're not talking about Clarence Carter funk or some of the other ones. We're not talking about the dog catcher type of funk. We're talking about financial funk. Anyway, however, some do see a bargain out there, and they say so. We recommend a number of stocks, but guess what? Of companies that have figured out that sometimes they have to go die to be reborn again, IBM may be that company. They've now, I'm going to call this their fourth life. They are now decided to, I've said this very often, I like IBM for one reason, and that is that when Cortez came to the New World here, he got all his soldiers and the sailors off the ships, and then he had one man remain on board. He burned the ships. There was no way of going home. There was only going forward. IBM has done that 4 times. I suspect that they at least have a good fighting chance again. But a company that decides to not go any further always just continues to shrink in market share and eventually fail. But this is it. Something in the DNA of IBM has always said, we know that at some point we have to burn all our ships and only go forward. And their bet on Watson is mostly that. But on this day in 1991, they were pronounced dead yet again. It was not true then. I don't think it's true now either. What did we have out here? We got several days to Brit. This is what I wanted to talk about when we came back to join together. And that is probably the biggest news on Wall Street has been pushed to the side for the Brit exit. And this is the biggest story as far as I'm concerned. Many people will look at what's ahead of them in the next couple of days and decide that that is the big deal, the British exit. They'll come up with something else. I don't think that there is anything more that will affect this market long term and even medium term than the ruling by the SEC to have IEX as a national market and part of the stock market itself. If you're unfamiliar with this, about, what was it, a year ago or 2 years ago? A year ago, 2 years ago. There was a big fight on CNBC. People from BATS Trading decided that they were going to lie about what and how the market actually worked. I think maybe the reason that IEX actually got approved on Friday was because of that. We also saw in the morning yet the New York Stock Exchange's president lie on CNBC about how the market worked and how the NYSE makes money. I think when the conclave went in, and it is actually very much like electing a pope, they go into their meeting at the SEC and decide whether they would approve IEX. If you're unfamiliar with this, there was the book Flash Boys, and the hero of the story was a pretty much unknown trader at the time that had decided that he was going to try to build a exchange with a time span so that high-frequency traders could not pick at the bones of us. Now, I'm probably never going to trade so many shares that it will end up being a great deal of money. But it was kind of the same thing in the Superman movie where the villain, he was kind of a semi-villain, maybe even a comic villain, decided that he was going to just shave off 1/10 of 1 penny of everything that went through and put it in his bank account. I think you can probably say that's exactly what high-frequency trading is. By putting in that 350 millisecond delay, they believe that they can make sure that high-frequency traders can't sit there and pick off individual orders. What we don't know is to the extent that this has caused huge disruptions in the marketplace, from the flash crash to other issues. But the reason this is so big, if IEX is allowed to actually go and finish this, I think they have a couple more hurdles to go. They have a lawsuit. The NASDAQ has already said they're going to sue them. It's going to cost the NASDAQ and it's going to cost the NYSE a lot of volume in what they do. It isn't constructive volume. It is nothing but a very tiny toll. But guess what? My guess is that these big hedge funds who don't enjoy having a little bit of money taken away from them every single day, that's their job, is to take money away from the general public. There's no honor among thieves. And my guess is that they will move fairly quickly to IEX, and therefore probably a lot of the people at the New York Stock Exchange and the NASDAQ and the other 27, or is it 35 ECNs around the world will either have to probably do this or fail. I can't imagine a fiduciary saying why he wanted to trade in markets where he knew he was getting front run. And that's exactly what this is all about. Contrary to the lies of BATS a couple of years ago, contrary to the lies of the NYSE president on Friday. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we'll talk about that. Anyway, I question if that was Lex Luthor. No, it was Richard Pryor. I don't know what character he name was. It wasn't a great Superman. It's Superman 3. Yeah, he was a computer programmer that siphoned off 1/10 of 1 cent of everything, and no one ever noticed. And he put it all in his bank account. He was the comedy version of Superman. I don't think anybody was very kind to that movie. The reason I'm saying I think this is going to be a huge deal is that it's going to move power away from the traditional operators at the New York Stock Exchange and the NASDAQ. Superman 3D, it was 3 something. It means that I think we're probably going to have a little less trading. So volume will probably come down. And with that volume coming down, I think we're going to have more trendy markets. I think you can point back to 2007 when the new regulations came out that made it very lucrative to do high-frequency trading. That was the key to really setting up the markets that we've had, including a great deal where they can move markets by 50 cents, where computers just keep moving things along. If you can't cancel an order within 350 milliseconds, you cannot do high-frequency trading, and that would be the end of that. We'd still have a fairly responsive market. One of the other things that came out of it, the SEC is describing that maybe that actual quotes should be free that are 1 second delayed. So a lot of stuff happening out here beyond what we're going to see later this week with the Brit exit. But that's it. Let's see, what else do I have? Yeah. Oh, I was just going to say, someone asked me what the lie was that the New York Stock Exchange said, and that was that everybody had the same date at the same time. And our friend at Nanex, not to be confused with Nadex, tweeted out on Friday, that is not true. For some reason, could you see anybody spending $60,000 a month per feed to get data when they could get it somewhere else for 1/100th of that price? Don't think so. And since both the New York Stock Exchange and the NASDAQ offer a special feed with a low latency and fiber optic to your door for $60,000, I don't suspect that's it. And one of the other things is the most expensive real estate in New York is a hole that comes up on 15th Street where all the major arteries of the internet come into New York City, so they can get to data just a tad faster. In fact, the highest real estate used to be in Japan. It's now 10 times that in the floor of that building, so that they can actually get data just a millisecond before everyone else and front run everyone else. So not a whole lot in there. It is a mad market. We're going to get into that today. You can give me a call at 877-927-6648. You can also email me at path@tfnn.com. Some people have already. And we'll get to that and then get to the charts I wanted to look at. Question. Well, I think he wants me to answer off that. And what do you think? This is a general question, so I'll just answer it here. He says, I'm thinking of buying NVIDIA calls. What do you think? I don't have a good edge in this market. For my midterm, long-term trading vehicle, I am long. For short-term, I don't know what the next 5 days brings. I am being extremely cautious in this market. As I said last week, I was buying in the short-term newsletter out of the money calls. One made 350%. The other one was a loser. So on the net, I'm up 250% for last week on those calls. Right now, I think we're probably very much in this for me, it's a no trade zone. I can hold what I have, short or long, but I can't add to anything now with what I like to call almost a legal term, an abiding belief of where this market is going. A lot of people said that the reason this market went higher this morning was a pull out of the Brit exit. I don't know if it did, because long before that poll came out on Friday, many of the big street names were buying huge amounts of calls for today. I don't know if they would have invented yet another reason for it to go higher, that they thought that bats would go higher and actually bring more people in, because high-frequency trading is a net loser over time in the markets. Therefore, they thought maybe it would be better for the long term for the stock market itself, maybe not for the NASDAQ, maybe not for some of these high-frequency trading firms, but as the market overall, maybe that would bring people back in that we haven't seen since the dot-com collapse of 2001. But that's it. Now, on NVIDIA, you've got a beautiful setup here that looks like a three-gap play. I don't know when their earnings are. Let's take a look at that earnings date. But I think if you're going to get a gap higher, it's going to be in this. This is one that I really missed a great deal in the Tech Insider in catching. But I didn't really see the rollover to buying the most expensive video cards that are available. I do now. In fact, I had a discussion with our engineer for the show here about video editing and just how much business that Apple has lost in video editing, and it's all been replaced by PCs. And guess what? Everybody wants fast rendering of their compiled video that's now digital. And almost all these products, including, what is it? I want to say Lightwave. We've got Max in Houston, I guess, on the line. Are you there, Max?
Yes, I'm here, David, and I was curious about the chart of Deutsche Bank.
Uh-huh.
It has another gap today,
Yep.
And it looks interesting. Tom was referring to it a little bit this morning, but I'm curious. I was going to try to get some calls on it, maybe 17 and a half, and I was curious what your, position was on that. I mean, what you...
Well, we were talking about this on Tuesday, Wednesday, and Thursday of last week, mostly because that was the buy point. If you're going to pull calls, you've got to anticipate the market. It's different than actually buying the equity, right? You have to anticipate that low of 14.13 was going to hold on the 16th, and that's where you would have been buying the calls. The problem is that once all the premiums come back into it, it becomes incredibly hard to ever make any money on a single position. At this point, once the stocks come up off the bottom, you really, as far as I know, can you make some money? Yeah. Is it going to be tiny? Probably. You want to hang on through the break?
Yeah.
Okay.
Sure.
We'll be back with Max in
Thank you.
Houston in just a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Max in Houston, you still there?
Yes, sir.
Okay. They wouldn't allow any tax on soda down there in Houston, would they?
No, definitely not.
I will not. I just saw that on the crawl out there that Philadelphia is taxing sugar in its soda. I drink diet, but I would fight with my
Yeah.
brethren to the death. They got to quit being nannies. Anyway, stuff bothers me. Max in Houston, we were talking about Deutsche Bank and whether or not you buy options. First of all, you got to know that about 85% of all options go unexpired and therefore a total loss. The only way to get them is when you have a huge edge in your favor. I like to play options when they are less expensive than owning the equity, or two, when they are so ridiculously cheap that if you get a move, it will be 4 or 5 or 8 times what you actually put into the option. That will take care of the times when you have a total loss. So at $14 and probably 25 cents or something, why it was down there, you have to almost be sitting in front of the computer and say, okay, I see that this volume's not going to be 10 million. I'm going to go ahead and bite the bullet right now and probably buy 15s at 425 or maybe 16s, right?
Yeah.
And then bet and hope that it gets to 20. 17 and 18, you can't go for a buck. So just since I don't know where your head is at, where do you think this thing is going?
Well, I think it's going to 17. I was looking at it this morning. I think the train, the boat may have sailed on it. So I was.
Yeah.
I didn't do something
To me,
stupid on buying something.
to me, options are sold like insurance. And for the most part, if you go burn your house down, the most you're going to do is get the money back to build the house, right? You're not going to actually make any money. And that is the problem. There are a few times when this is incorrect, and that is when everybody's on the wrong side of the market or when the options are getting ready to expire. I think we were talking about it earlier on Friday. Or actually today, I had one that did the IBM calls we had in the newsletter did 350%. The calls we had on Netflix did not pan out, and I think they were like a 90% loser. But on the net, we were good. So you've got to make sure that you make a huge, not just a little, but a monster amount when you're right. And I just don't see the asymmetry in the bet there. Do you understand what I'm saying?
Yes,
to me,
exactly.
I would almost be, if I didn't see a lot of stuff coming, I would almost be more willing right now to be selling spreads until the vote. Because my guess is that the VIX actually after today will probably start rising into that vote. We also saw that the futures contracts went from, like on gold and silver and a ton of different things, went to from 200% margin to 100% margin. So there are going to be a lot of people selling things and probably looking at options that are not controlled the same way. So to me, I'm looking at probably the actual movement until the vote is counted, probably decreasing, but the price for the premiums increasing. So I think you could maybe do a spread here. I'm not a big fan of spreads because I don't want to risk some money to make a little money. But it's very hard for me to see any kind of bet in the market right now, short-term bet between now and this Friday, that isn't trying to pick up dollars in front of a steamroller. It's all great unless you fall down. You know what I mean?
Yeah.
You don't want to be that guy in front of the steamroller who gets his foot stuck.
No, definitely. Well, let me ask you this: what's your gut feel for how the vote is going to go? Do you think they're going to stay, or do you think they're going to go?
You know, from reading the newspapers over there, I don't understand how anybody could vote for it. It's complete with everything else. But, I don't live there either. And a lot of people are, this is going to be, and, there's some flat out lies. The Cameron is a lying skunk about what's going to happen. So he is telling everybody they're going to starve, die, whatever. It's his political career. So they're trying to inflame tensions. But to me, the thought of a country that's not that large being inundated with more people from the outside than the inside, which is a possibility if they continue down the road that they're on would be rather scary. I think that there should be at least some limitation on the amount of people that could come into your country from another country that you then have to take care of. And that is a problem here in the United States. It's being discussed. Over there, if they vote to stay, they will have zero input. It's whatever the rest of the EU tells them to do. And let's say Turkey becomes a member, there is potentially 78 million Turks that could move in tomorrow into England, and they wouldn't have a word to say about it. And that is the opposite side of that argument. To me, if you know anything about the argument, it's almost impossible for me to think that anybody would vote to stay. But who knows?
Yeah.
There's a lot of people that believe the politicians when they say you're all going to starve in the street. So who knows?
Yeah.
I think that as soon as the vote goes through, it's going to be over in about 2 days, and that will be it. Everybody will go, well, it really wasn't all that bad, and let's move along. What's next? I think it's only going to last a couple of days. Everybody's going to figure out that the claims of doom and destruction are far advanced from reality.
It's true. All right. Well, thank you. I appreciate
You bet.
it.
But yeah, again, when you think of options, probably the best, I'll finish this segment. I learned probably more from reading Fooled by Randomness about options than any other book about actually trading options. And that is that so 85% of options go expired. Why could you ever buy an option? And the answer is what happens on the next 15%. I could tell you that there was a $2 million draw for Lotto tonight, and you had 1 in 100 chance. You'd be a fool for $1 not to take that chance. And the problem is that 90% of the time, you don't have an edge in the market, maybe even 95% of the time an edge in the market. But there will be that 5% of the time, and that is the worst part of trading options, and that is infinite amounts of patience and then huge amounts of aggression when you do have that edge in the market. I'm told that race car drivers have to have that same thing. They drive out there for 500 miles. They have to be incredibly patient. The last couple of laps, it's all about aggression, not wrecking. And the old saying in stock cars is to finish first, you must first finish. And if you're not in there at the 499th lap, it does not matter. So infinite patience and then infinite aggression when it is called for, when it's time to act. We'll be back after this. We'll start looking at those banks in Europe.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Last week, it looks like from my notes, it was, what is it, Yes. I said the most important thing was how these banks in Europe were acting. We'll go back through and take a look. They had either come down to gaps on lighter volume or had lighter volume and actually had heavier volume and retracted. Some of these do not look all that great. Barclays, not one of the better looking ones. But the downside was far too many people, far too short the market for conditions. Oh, I forgot one thing I wanted to bring up about the options. So let's talk about that before I get done. I say one thing and I repeat it in the newsletter and newsletters all the time, and that is options are to reduce risk, not take more on. So if you were going to have a trade and whatever it was, and the stock was $100, and you thought you could lose 1% of your portfolio on that trade with a proper stop, then you could figure out exactly what your position size for the equity would be. What you don't want to do is actually lose any more money than if you were trading equities. So if you could take 100 shares of a $100 stock, then you can have one options. Options are to reduce risk, not take more on. That is the other big problem that most option users have, besides waiting for probably 1 out of 20 times when they actually should be putting on an option position, is understanding that by putting on bigger positions, they no longer are the house, they are the sucker. And as a wise poker player once told me, he said, if you sit down and you look around at all the other players at the table and you can't spot the sucker, it's you. So just a thought out there. What else? Okay. Oh, want to look at some other ones out here. Let's take a Credit Suisse, see how it's reacted. Nice volume on the way up. I think this is a total change in the sea change in the business for Credit Suisse or any of these banks? The answer is no. I just think everybody got far too short, far too early in advance of the vote on this, Thursday and Friday. February 11th set the high volume low in Credit Suisse, $12.56, 4.4 million shares. Now you had a high volume move underneath that, and within 3 days, this thing was back into the trading range. We talked about this on Friday, 5.6 million. Of course, you had that 6.2 million share out there, which says that you can retest that low of 11.59 yet again. So the downside, though, is just how many of these things weren't showing a lot of volume at those lows. We looked at Deutsche Bank already. Let's look at HSBC. HSBC. But they weren't coming in with all the kind of volume and energy you would like to have. HSBC was a good example of that one. This one actually came back down to the lows, and energy was actually lower from that April 29th, 26th high down to the June 16th low. And, so you had higher volume down at this low on June 16th, which suggests that one, high volumes are not a low until they've been retested on lighter volume. It also did not pierce the $29.14. The only thing that displeased me, of course, was that you didn't get it to pierce that low, and you had far too many people all short. As Mark Twain said, when everybody's of the same opinion, it's time for you to pause and reflect. Short squeezes in the market are like this. You do have a sign that a lot of these stocks can come back and touch these. If the truth of the matter is that a Brit exit actually makes these stocks go lower, I would not be surprised to see them lower on Friday. I think that there's a good chance that they pass it. Did have an email during the break, and it's from Adeline, and she gave me a link to whether or not, even if they vote two, the politicians may just ignore them. Well, they've been doing that for a while, so that would not be anything new in the EU. We talked about it maybe 2 weeks ago on a Monday, that they had appealed 70 different rulings, or 72 different rulings from Brussels, and they hadn't won one of them. That is the UK versus the EU. So my guess is there's nothing new in any of this, just whether or not they've had enough to go away. But my guess is if they vote to leave and the politicians do not, I think we've probably just seen the first of the shootings over there in the UK. You have to have a fairly compelling reason to think that you're smarter than your subjects. And in this case, I do not think that they are. And if it takes pitchforks going after the people, it probably is something that would be necessary to be done, in my opinion. What else do we have? Lloyd Banking, LYG. Take a quick look at that. Question from the email. What do I think is the most important thing this week? I think it's still these European banks. I think they're going to tell us more about anything going on in this market than not. Nice gap up in Lloyd's today. Huge gap up, actually. And, you've got the markings of a potential three-gap play. I would not be surprised to see one more gap in some of these maybe tomorrow or Wednesday ahead of the vote, and only to get everybody to get crushed. Probably the worst thing that you can be in one of these stocks is short right now and probably long come Friday. The reason is that if they stay, there won't be any shorts to have to rapidly cover, or there won't be many shorts to rapidly cover in these banking groups. They've all been run out. On the downside, there won't be any shorts to cover. For me, the option would be to think to the downside on these for the British exit vote if you wanted to make a play that way. PUK up 5% today. Take a look at this. Still a lot of lows out here that have not been retested. The only thing I disliked was that light volume last week of so many of these that looked like they were ready to bounce, and the huge short interest already in them. As I've said many times, being short means that you're either going to be 3 minutes, 3 hours, 3 days, 3 weeks, 3 months, or 3 years probably ahead when you make a short position. And you just need to know what it is. Sometimes you'll be late, but almost always it seems like at least you feel that you will be early. Two nice gaps here. Would I be surprised to see one more gap in Prudential up to this $40 level tomorrow? I don't know. I'm going to look at the shorts tonight, but would it be beyond the scope of reason? I don't think so. We'll talk about this in the last segment, go through a few more of these, but dangerous markets, dangerous times, big movements. We'll be back in a minute.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Let's take a last look at the market. 2092 on the S&P cash. Volume is light, but as I've said, for the last 2 weeks, we're in the doldrums. Volume is neither expanding on the way up or on the way down. It has just decreased. And this morning, was volume strong in the first couple hours? The answer is no. Is the volume strong now? No. But it wasn't strong on the way down. I look at the New York Stock Exchange tape. I know others look at other things. But that is every trade that is available on the New York Stock Exchange, including the AMEX, whether it's traded on an ECN or not. I also have the NASDAQ volume, but it seems to be less specific to the movement of the market. I don't spend a great deal. We've got almost 1.2 billion shares on it. But to me, I look at that consolidated New York Stock Exchange tape, give me a good idea just how the market is moving, whether it's moving with energy. I think we are, as I said before, in the doldrums, and I don't think anything other than a giant breeze is going to get us out of this trading doldrum. Royal Bank of Scotland, nice gap up, huge volume on this one today. The downside of waiting for one more gap up here would probably be overwhelmed by the volume. Anytime I see this kind of the highest volume in a year, I normally think that there's an exhaustion move in a stock. A lot of these are going to be kind of playing back and forth, but you've got everything that just looks like a three-gap play for all of these out here. I could see them running every short in the market and having these things collapse next week. It would not be beyond the realm of that. We talked, what was it, somebody about Tesla last week. I said this was the week probably if you're going to short. I'm not bearish, but if you were going to short, I would have a lot more confidence in a short later this week than I would have, like I said, in the last couple of weeks. It's going to take some kind of giant event. Maybe it's a Brit exit. Maybe it's something else that comes along that actually gives us enough force to get out of this area. But as far as I'm concerned, we're kind of stuck. See if there's anything else here I want to look at before the end of the day in this Prudential, Lloyd's, ING, Deutsche Bank, Credit Suisse, Barclays. Let's see if there's anything else I want to look at. Got a last-second request to look at Microsoft. I haven't looked at it today so far. See if there's anything else out here. No, it's just kind of bouncing up off this thing and filling the gap, so I don't see a great deal out here. You got higher volume down to that June 13th low. You need a retest of 49.06 with lighter volume. That's probably not going to be a problem with 83 million shares. But to me, they're spending money. You could probably look for another acquisition or two, and that may be the mindset behind Microsoft. I don't think there are a lot of fundies on Wall Street that are going to go screaming about this thing going right back up to $56 with the possibility of more huge buyouts like that of LinkedIn. But is it a bad-looking stock? The answer is no. It's just I think that you're going to need some digestion time. And it may take 6 months to 9 months to incorporate LinkedIn in these stocks or in Microsoft. So to me, this is probably in a trading range. It's probably in a trading range for a while, maybe 6 months or a year. The highest, $56 probably. Right now, I don't see anything lower than this $49 range. But not a lot of money to be made. On Wall Street, they call this dead money. We'll see you tomorrow. Same bat channel, same bat time. Remember to sell when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.